Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money. You can't afford to miss it. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to put it all in perspective here. Maybe make you a little money. My job, entertain, educate, teach, coach. Call me. Get on the show. 1-800-743-CNBC. When you got a market that just won't quit, Dow rolling up another 30 points, S&P gaining 0.3%, you got to recognize that the bull keeps reinventing itself daily. All right, take today. After a brief week-long pause where the high-growth stocks did absolutely nothing, they came roaring back. With Cramer faced Netflix jumping $9, Chipotle vaulting 7 smackers, F5 up 5. Amazon and Apple caught fire too. Yes, you could say those fads can stocks can still ramp. Fads can? That's an acronym. F5, Apple, Decker, Salesforce.com, Chipotle, Amazon, and Netflix, and they all got their mojo back. Now, they are being chased by a posse of Sienna, Arm Holdings, Acme Packet, Cypress-City, and so many other terrific networking stocks that you got to ask yourself, who are those guys? All courtesy of a monster quarter from old Cramer Love, JDS Uniphase, which can barely handle all the business it has to test optical equipment behind the mobile internet tsunami to make sure it works, just like 1999. Isn't that the story of this phenomenal bull market? We get some huge leadership from the growth stocks, then they pause, and other stalled stocks then follow. And with that in mind, I think we could have another move up in a very stalled group, the bank stocks. Despite the weak employment report today, that always sends us down. Why? Because this very evening, Bank of America took the brilliant step of separating its bad mortgage loans, especially those poorly performing countrywide loans, and putting them into a new business called the Legacy Asset Servicing Unit. It's a smart decision. Coming up next, we're going to hear from Terry Loughlin, who'll be running that bad bank within a good one, as I call it. We're the first ones he's speaking to. You don't want to miss it. I think the whole group could get a lift on the news next week. This is monster good news for those of you lucky enough to own Bank of America. Thought I would never use that phrase in connection to BAC. My charitable trust does, actionalertsplus.com. Hey, finally ready to roll. What else? On Monday morning, we're going to get an important checkup on the restaurant biz. Well, one of the two CSCOs, I think the better CSCO, the Restaurant Supply CSCO, reports. We need to take the temperature of America's consumer. Few companies can tell us more about whether Americans are dining out. Remember, you don't have to go out. Then these guys, suppliers to thousands of restaurants around the country. Plus, CSCO should give us a terrific read on food inflation, too. Boy, can people stop talking about that? Hey, my Super Bowl party, how expensive. After the close on Monday, we're going to hear from FMC, the old Food Machinery Corporation. This is one of those stocks where you get two bull markets in one. The red-hot chemicals bull and the raging bull in agriculture. FMC makes insecticides and herbicides for ag, along with specialty industrial chemicals like soda ash. It's the largest supplier in the United States, and that for glass, probably the hottest commodity in the world right now. This is up 20% since I recommended it September 16th at 6666, the sign of the devil plus a 6. And I still like it because I believe the numbers are too low. We're going to find that, if I'm right, on Monday. Now, switch to Tuesday. TEVA. The largest generic drug maker in the world reports on Tuesday morning. Generics are the key to cutting costs in the healthcare system, so TEVA will give us a good read on the state of the industry and of healthcare cost containment. Be careful, though. This stock has often sold off after even the most terrific of quarters. That's what I bring to the table. Tuesday after the close, there's, wow, a stock that's really been just up and down, Motricity, which provides the portal to the mobile internet for many non-smartphones, also helps wireless carriers snag their fair share of online advertising dollars. We think Motricity will have a very good quarter, and the stock is now low enough that it will actually matter. I also want you to open your brain to OpenTable, the online restaurant reservation play when it reports on Tuesday. This is an explosively positive situation. I think it could deliver a gigantic number, maybe a decent deep-in-the-money call play, like I suggest in Jim Cramer's Getting Back to Even. I got to tell you, restaurants are adopting this thing like mad. Remember Danny Meyer, author, restaurateur, hospitality guru? So on the board of directors at OpenTable. He's bankable. Keep an eye also on Disney. That's right, the Walt Disney Corporation. News Corp saying cable's doing great. We also heard that from GE, non-parent company of this network, when we still had a hand on the cable game. And with travel coming back with a vengeance, this could be a terrific ESPN/Disney World quarter. Maybe a world of laughter for Disney, more than a world of tears. And maybe they'll tell us more about the new Chinese Disneyland that they are opening in Shanghai. Hey, it's the end of the week. I get a little tired now and then. You know what I mean? I'm not as I'm mellow. I'm more mellow than I used to be. Wednesday's a huge day. A lot of big earnings. Let's take a look. We'll be focused on AKAM. Boy, that stock's been stalled. Mobile Internet Tsunami name reports after the close. That's about delivering fast, reliable, high-definition video over the web. I think it's terrific. I think that CSCO should buy them. They should use some of that cash to do something. Speaking of the devil, yeah, CSCO reports Wednesday afternoon. We're hoping the company will be able to redeem itself with a good quarter. Last couple have not been so hot. We also got Core Labs. This is one that we've introduced to you, I hope. This is the big oil technology company that always, no, that's hyperbole. It almost always sells off after it reports a really good number. So maybe you wait till Thursday to buy Core Labs. And then there's Terex. Yeah, this is a machinery company. I like to think of it as a poor man's Caterpillar. Now, seeing as Manitowoc blew things out, that's the crane company I told you to buy in last week's game plan at $13. 39% return in a week, better than a sharp stick in the eye. I think Terex will do the same. Be careful. The stock has moved up a lot post-Manitowoc, so don't buy this one unless you get a sell-off on Monday or Tuesday. It is option expiration week. One of these days is going to be down very big. That's what keeps happening. Oh, don't forget, Tuesday, Ralph Lauren reports. Oh, no, I'm sorry. He reports on Wednesday. Let me get that straight. Ralph, I met Ralph. He's like a big fan of the show. The stock exploded upwards today because of a drop in cotton prices, part of a rotation to a heavily shorted apparel group. Let's just say I wouldn't stay short Ralph, Polo Ralph Lauren, going into this quarter. Not with high-end merchandising blowing the door out of the malls. Now we got not one but two big beverage companies reporting this. We got Coca-Cola on Wednesday, and we have PepsiCo on Thursday morning. Rang the opening bell. There was Super Bowl honorary there. That's the official sponsor. Everyone is worried about raw costs for these two, just like they were worried about raw cost cotton the other day. I say, come on. If they get hit, you buy them, particularly Pep, because if it yields north of 3%, which it will at 63 or below. My charitable trust, ActionAlertsPlus.com, already owns Coke after we made a killing owning PepsiCo earlier. Also Thursday morning, little one that we try to focus on something that we keep talking about, like Core Labs. We like this little thing called Treehouse. Yeah, Swiss Family Robinson. It's a big private label player. This one's been very good to us, up 24% since I recommended it a year ago at $39.05. We still think the solution to supermarket profitability, like the solution to drugstore profitability, is private label. We expect a big quarter from these guys, just as we got from Perrigo, the store brand drug maker. Now again, Treehouse often sells off right after reports. I wouldn't buy Treehouse till Friday. Cramer fave Chipotle. I love mine. I got a Chipotle to end all Chipotles on Route 22. Anyway, Chipotle reports, and this one is it's been running all week, all right? We're going to predict right here that we're going to get another explosive quarter. Again, I would use deep in the money calls to buy this. Now, I got my fingers crossed that they're going to reveal their new Asian restaurant concept. That could accelerate an already accelerating growth story. The shorts have tried and failed to stop this one, and I think that continues next week. Thursday, by the way, also is Bob Iger's birthday, so anybody who's a Disney aficionado or if you work for Bob, wish the chief a happy and healthy one. We're going to be watching for Discovery Communications on Friday. Cable is red hot. Remember, we said that same thing earlier in the week about Disney. And I suspect pure play cable company Discovery will be red hot right along with it. Finally, there's Total, never to be confused with the cereal Total. That's the unglamorous French company. It has a 4.4% yield, reports Friday morning. We like this one very much. All these have been pulled down by how bad Royal Dutch was when it reported. Now, there's a bunch of IPOs coming next week, including the largest energy IPO in ages, Kinder Morgan. This one's KMI. It's the parent of Uber Cramer fave, Kinder Morgan Energy Partners, KMB. My take, deal could make you a little change. But please, please, don't sell your KMP to buy it. While the new company might have more growth, it will have a much lower yield than KMP, and that's why we're in KMP to begin begin with. Bless putting in for a KMI deal for a trade. I want you to stay with KMP for the investment. The bottom line, tune out the noise and focus on the earnings. Cisco, FMC, TEVA, Motricity, OpenTable, Disney, AKAM, Cisco, that's not a typograph, Core Labs, Terex, Coca-Cola, PepsiCo, Ralph Lauren, Treehouse, Chipotle, Discovery, Total, when they report next week. And get ready to rumble in Bankland, courtesy of the good bank, bad bank revolution coming out of a company we're about to hear from, the Bank of America. Paul in Minnesota. Paul.
Hi, Jim. Thanks for your help in getting me back to even and a heck of a lot better than that.
That's the game plan, man. I got to get everybody back and get them back to even, get out of those CDs. What's up?
My question is on American Axle. They report earnings on Tuesday. They had blowout earnings in the third quarter, and they got a lot of new products. They've diversified their customer base over the entire auto industry. Plus, they got the plant in India now that they just finished up with. They got less than 8 in the P&E, and they got all this day-to-day volatility. Right. Where are we going with this?
All right, well, you know, ever since Ford reported that weak quarter, this group has really given up the ghost. And I think you set it up correctly, sir. I think you're close to the situation, certainly closer to it than I am. I like your reasoning, and yes, I would indeed buy it ahead of that quarter. All right, big week next week. I want you to tune out the noise and listen and learn from these companies and get ready to rumble with the Bank of America, which took my advice and split into a bank with a legacy bad and a bank with a spectacular good. Bank on Mad Money. We'll be right back.